Hello, everyone. Welcome to Portfolio Room podcast, where we explore the trends of impacting private equity. Today, I'm Gleb Ismailov, private equity CFO specialist, head of Benelux, and excited to have today Bart Horemans, CFO of Gardrun, currently, uh, portfolio company of Down to Earth Capital. And today, we will discuss the desire of private equity funds for food products.
Hi, Pep.
Bart,
Nice to be in your podcast.
so thank you for coming today, Bart. So, Bart, I think the foods, consumer goods industry in private equity is in general interesting topic. And what I want to start today is to ask you, in the times of economics recession, how badly the demand for luxury food products will be affected, you think?
Well, I think that in general, luxury products are doing very well in difficult economical times. So, for example, if you look at the success of LVMH since 2020,
Mm-hmm.
you see that luxury goods are often a way for people, on one hand, to show that they are doing fine, although of the economical situation,
Mm-hmm.
but on the other hand, also an escape. So it are difficult times. So people sometimes, want to buy something expensive just to make them feel good, even if maybe they cannot really afford
Mm-hmm.
it. On the other hand, as you mentioned, so I'm working with Gudrun. Now we're in the chocolate industry. Chocolate is sometimes also seen as a bit of a luxury product. But of course, we also know that chocolate is not champagne or caviar. So I think in these kind of
Mm-hmm.
industries, we don't benefit from this trend. And here we see more and more the trend towards private label. And so we see because of the economical situation, people have less money to spend, that they're choosing more often for private label. And I also
Mm-hmm.
think that if you look in the past 10, 15 years ago, private label products were often a bit of inferior quality because they were, sometimes it was more a leftover from branded manufacturers,
Yep.
or because they needed to be cheaper, they had to reduce, let's say, quality. And I think nowadays that's completely different. I think now the main difference between branded products and private label is more in the marketing costs, because brands need to spend a lot of marketing costs to keep consumers interested. And in private label, you don't have that. So I
Mm-hmm.
think the quality of the products, private label products, is often equal to branded products. And the difference today is more in the fact that they
Mm-hmm.
don't need to spend the marketing cost. And people are
Mm-hmm.
starting to see that. And they're making more conscious choices, price versus quality. And that's what, a trend that we see, that people are making the choice more often for private label because the quality is also fine for that.
This is, yep. I agree with you in that sense. Even like, when I go to the shopping mall, let's say, I see that there's either queue in the shops
Yeah.
like LMVH, as you mentioned, or like either
Mm.
something like
Yeah. Yeah.
Zara. So, like more like or, but more and more I see private
Yeah.
labels as well. Price quality
Yeah.
is way better than. And in that sense, as we're in the hard times right now, as they say, right, like the IPO percentage has decreased, the demand for IPOs, everyone trying to postpone it. How do you think the current economic environment will impact carve-outs in the consumer goods industry
Well, I think it's
about
probably
the exits
similar
as well?
in different industries, or in all industries. Often a carve out or divesting part
Mm-hmm.
of the business is seen as an alternative
Mm-hmm.
way to raise capital, because of the with the high interest rates. It's become more
Mm-hmm.
expensive to go to the bank to get money for your investments. And so more and more companies in a downturn are looking to rationalize their portfolio. So if they have a business unit that is less profitable, for example, then they're more likely to carve it out or to sell it, because that's a way to get
Mm-hmm.
new money in, so they can invest it in
Yeah.
more profitable business. Or of course, sometimes companies are forced to divest part of their business because they need to pay back their loans when they're a bit over leveraged
Mm-hmm.
in times of low interest rates. So yeah, I think carving out or divesting part of the business can be, yeah, a very good alternative for the company who has to do the divestment, but it can also create, yeah, nice opportunities, I think, for the buying side, and also for private equity investors who maybe can do, yeah, a bargain this way. Yeah,
Yeah, those who have
yeah,
cash now have actually good time
indeed.
in that
Yeah,
sense, yeah, to get really good opportunities. And what would you say? Your thoughts in consumer goods business. What are your thoughts regarding? Would you rather buy and build, or versus acquire more companies, or versus you would actually build the
hmm,
company? Is it better to do organic growth or buy other
yeah,
competitors?
yeah.
Essentially, that's what I'm trying to
Yeah,
understand.
also, yeah, I think there's no one right answer. I think it really depends on the situation. In private equity, it will also depend in which phase you are. Eh? If the private equity fund has just invested, they want to grow very fast, and often it's faster to buy competitors. When you're a bit, when you're already for some years in the portfolio, maybe they don't want to invest that much or that fast, and then it will be more about growing the existing business. But I think, yeah, so it's to be looked at case by case. Of course, when there is a competitor with a good market share in a complementary market or geographical area, maybe it's cheaper to buy them than to try to fight them.
Yep.
So then it can be better to take them over.
Yep.
What I'm always a bit careful for is that I think a lot of acquisitions are done because the synergy advantages that are there, I think often they are a bit overestimated. So I think that's something you really need to watch out for. So it's important to have a good due diligence before you take the step, but it's even more important to also execute the integration in a good way so that you can also grasp the benefits that are there.
Sure. Makes sense. And in terms of now, as we're getting more and more e-commerce websites, online digitalization, would you say, the consumers' demand for shopping online is obviously
Yeah.
rising? What do you think what's the best approach for brands in consumer goods industry to reduce costs? Do you think channel, alternative is a good idea, or?
Yeah, I think so. Yeah, we will know the correct answer in 10 years probably. Yeah, because now it's a bit too soon. Indeed, e-commerce is, yeah, the market has really boomed during the pandemic. Yeah, we see it
Yeah.
now cooling down a bit, so it's still increasing, but more in a realistic sense. And I think a lot of companies started their first journey, let's say, their online journey, 2 or maybe 3 years ago. So we're all still,
Yeah.
let's say, learning how to surf the wave. But in my personal view, I think in I don't know, 10 to 15 years, probably I think consumers will buy 80 to 90% of their things online. So for me, online is
Yeah.
really the way to go, especially in the B2C area. So I think companies to be successful or to stay relevant, they need to invest in online. The question is, how long do you need to keep investing in your physical shops? I
Yeah.
think also there it will be different per industry, or for some brands it will be different than for other brands. But I think the more and the faster you start investing in your online channel, the sooner you will be able to reduce your investments in your physical shops. So, and then I think it's company per company. You will have to see where is the tipping point. When do you start or stop investing in your shops and start closing shops? But for me, omnichannel is more a transition phase, and in the future, I think it will be more and more online and less physical shops.
Sure. Okay, but on other hand, don't you think, like, I mean, obviously due COVID, online shopping was, the
Yeah,
best idea, right? And those who were prepared for this were obviously, striked up. But in terms of, like, they said the same thing for restaurants as well, that people will order food. But don't you feel like that after COVID, people realize that actually, going to shops, for specific product, it's actually like, it's kind of an
Yeah,
experience. Like you see the shop, you like it kind of persuades the buyer to acquire the product essentially.
yeah.
So do you think this also like, do you think it plays a role in that sense to keep shops?
I think it will. I can also imagine that some brands will specify, will say, okay, we don't want to go for online. We really want to go for the experience. That can be a strategy. On the other hand, I think if you look at the long term, yeah, probably this emotional factor will be less and less relevant because the benefits of online will be bigger and bigger. But also, if you look, and I'm not an expert, but if you look at, for example, the metaverse, there you also
Yeah.
start experiencing this. We already see it also with in the gaming industry, with Fortnite, and so there's really
Yeah.
communities, and the people who are using it, yeah, they don't need this physical shop anymore because they get the same emotions online.
Yep.
So yeah, I think, yeah, so this will evolve very fast. I don't know what will be the next phase. I'm not a specialist in that, but I am a believer that is the way to go.
I've realized as well, like when I went to Nike shop just recently, and I wanted to get like a
Yeah,
pair of
yeah,
trainers basically, and I said, "Wait, you have it, but why you don't have like all the sizes?" They're like, "Look, the main thing of us is now to for
yeah,
you to see and then order it
yeah,
online. That's
yeah.
the idea." That's it. I'm like, okay. And do you think, in terms of also inflation, I
Hmm.
think it's everyone is talking about it. Do you think how will inflation affect the ongoing supply chain disruption, affect the consumer goods
Yeah.
industry? Because surely it should play a bad
Hmm.
effect in that sense.
Yeah, I think that basically, yeah, the worst of the inflation is probably already behind us, and also supply chain disruptions. I see that they are, yeah, minimized versus a couple of years ago. And I also think that
Yeah.
there's a lot of focus now in the media, etc., on inflation and high interest rates. But I think, and that's an advice that I would like to give to, especially also younger generations. You're also a young guy still. Is to also look at the more longer term trends. So um, don't only look at what is happening today or what happened the past 2 to 3 years, but also see, okay, for example, inflation. Yeah, that's not new. It's something that comes back every couple of years. So how to deal with it? It's also not that exciting, because in the past people already thought about that. There are books written. I assume if you ask ChatGPT how to deal with inflation, that you will get quite a good answer.
To give you
I didn't
advices,
I
yeah.
didn't ask yet, but I'm sure that it will be quite relevant. So let's say my advice is, especially to younger people, yeah, look how people dealt with it 10 years ago or 15 years ago. Look what they did well, which decisions were good, and build on that. Don't reinvent the wheel,
Yeah.
and learn from the bad decisions. So try to do it better with the knowledge that we have now. So yeah, that would be basically my advice. So don't focus too much on what there is today. Of course, we need to take action for inflation, etc., etc. But also try to look at the trends which are 20 years or 50 years instead of only the 2 to 5 year
Yeah.
things that are going on. Let's say.
Think long
Yeah,
term in that
yeah.
sense all the time.
Yeah, and there I
Yeah.
think
Agree.
also in private equity, yeah, that's also important. So I think the private equity houses are also looking at those long-term trends and also trying to invest in those. So just an example, let's say the scarcity of drinking water, which in Europe is not yet a problem, but in other regions it is. So I think the good PE houses are looking at those trends, the long-term trends, and investing on those. So if they see companies who have good technology to solve this problem, or who have nice innovations to deal with the problem, yeah, they will invest in those companies, and they will also be successful in the long run, I think. Yeah. So also, I think in the media, etc., we should also focus more on that, because if you
Yep.
make, for example, the comparison with China, China if you look at China, the last 25 to 30 years, they have grown enormously. They have become much more powerful in the whole world economy. That's because, or partly because, they look long term. So they look ahead 40, 50, 60 years ahead of them. That's also why, for example, they
Yeah.
now control all the resources for batteries and for electrical transport. Yeah, that's not a coincidence. That's because they saw it coming.
That's
Yeah,
what yeah. And also all the like all the ports,
yeah,
they try to
yeah,
buy all the ports like to so they always the supply chain is always there
yeah,
that they will
absolutely.
control.
So
Yeah,
yeah,
that
it's really.
sounds
I think we should
very smart.
start doing that more and more, also in our restaurant industry, if we want to stay
Yeah,
successful. I think a good example, for example,
for sure too.
is what the European Union is doing now with the Green Deal, with ESG, where they also have the courage to say, okay, we're taking measures, and they will be painful on the short term,
Yeah,
but in the long term, they will be beneficial for us. So yeah, I hope
yeah,
that is
I agree.
something what also new generations will start doing more and more.
Yeah, for sure. I will. I think for for all of us that we need to think long term in that sense, not just
Yeah.
short term gain. Totally. Sure, Bart. Thank you very much for stopping by today. I knew that this discussion will be very interesting and insightful, and I think all of us, not just from private equity in this industry, got some advice and tremendous education from all lessons from that stuff. So I really appreciate your time, and again, just want to say
Okay.
thank you
Thank you very much,
for
and
coming today.
success.